Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. We welcome you here today. We got the Ben Watson in the chat, and there is the bell. We welcome all of you here today. We got Ocean Life, Jim, Ricebird, Life in the Fast Lane, and many others. Robin says, "What a day, boy!" You are right about that. It has definitely been an interesting day. BJ says a red shirt. Okay. BJ says surely he swapped shirts mid-class. Red. Okay. JB color is color choice is off. Well, speaking of that, let's kind of fix this. Okay. Let's kind of get some help here. We're trying to help those bullish investors get a little push. Thought I'd play a little joke with you here today. And the real shirt that I really wanted to wear is the one that's underneath. And so we'll just kind of take this. We don't like that red shirt. So let's just go ahead and take this one off. And let's go with that green shirt. And I thought I'd play like a little trick with you just as we get started here. And it was hard to make sure that there was no green showing. But if you're a bullish investor, this maybe shirt actually fits a little better. Now, it's not a recommendation to wear a green shirt, but if it's your favorite color choice for yourself, that's your personal choice. All right, so a little fun there. Let's go ahead and get started. Now, a quick reminder that with what we discuss here today, it's done for informational purposes only, and also should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of research, and also the paid money software is provided for educational purposes only. Understand that we don't just have a software-based version, we have a mobile-based version of Thinkorswim and also a web-based version as well. And also remember, when we talk about investing, investing involves risk, okay? So we know that things can go up and they can go down. And so understand that we want to try to kind of talk about how do we try to manage that risk. Okay, and we've been talking about that, and we will continue to. Also remember that past performance is no guarantee of future results. So just real quick as we're coming up here, Ben is going to be doing a workshop coming up on this Friday and Saturday right at the Detroit Marriott at the Renaissance. Okay, heads up on that. First day technical analysis, second day option strategies. We'll also be going to Denver, the Gaylord Rockies, second and third. Same format, first day technical analysis and also the second day option strategies. I remember doing a workshop with Ben Watson where he had something on his head that looked like two ears. And I had to present with Ben for about 90 minutes with those ears on. It was a little unusual, but I got over it. So anyway, Ben's a funny guy and he does a great job. And you can also check us out right in Anaheim. That's the Advanced Concept Workshop on advanced options. That's the 30th and 31st right in Anaheim. You can go to schwab.com/events, get more information about those. Those are free as a Schwab client. Just want to give you a heads up on those. Now, just real quick, also, we want to kind of talk about, I drew up a diagram yesterday on Monday, drew up the diagram again on Tuesday, and I want to kind of talk about those growth sectors, value sectors, and income sectors. Also, I want to really talk about kind of maybe some trade setups. Maybe does the investor look for the growth areas to maybe rebound? Or are some of those value and or income areas potentially still placed to still look, okay? Now, and also what we're going to do is examples on the platform, okay? Now, Thea had a question on volatility, and I'm going to come to that in just a moment. Let's go ahead here and just take a quick look at, I want to just pull up just real quick the SPX for just a moment, okay? Now, before I do that, let me just kind of pull up, zoom in on this. Let's go over here to the left-hand side. And so, are we up 29 points? Can anyone read that for me? Am I reading that correctly? And actually, I want to go down here since we're talking about the indexes. Is this 29 points? Is that 29 points or 2,900? Just want to make sure we're on the same page. When we look at the S&P, 474 points, okay? So this is probably one of the biggest days. I've looked at the market a long time. It's probably the biggest, well, on a point basis for sure, okay? The biggest point move I've ever seen. Percentage, no, okay? But you're going to see that 2,900 points on the Dow, 7.87% there. And what you're also going to notice when we talk about the Russell, 8%, excuse me, 9.5% if we look at the S&P, and you look at the NASDAQ, it was literally 12%. Mama mia, okay? Big one. And if you're a semiconductor person and you like to look at that area, that neighborhood, well, it had year-like returns in one day. Now, one thing we want to kind of get straight just real quick is Thea asked a question, and the question was as follows. What indicator did you use, or would an investor you really use to maybe consider some bullish positions? The key word is some, okay? We have to understand that volatility is not just measuring downside movement. It's also upside movement. It's a range, okay? And so when I came back on Monday from vacation and the VIX was at 60, I asked the question, how many times do you see the VIX at 60, okay? And if you were to put on bearish positions when the VIX is at 60, historically, not saying that's going to be the future, but would those trades probably work? And if you would have put those trades on historically, not saying that's going to be the future, but those trades would have lost, okay? So there becomes a point where maybe the probability is we can get snapback rallies. And that's what I called yesterday's class. Now, what we're not saying is that everything is perfectly uptrending. We're not saying that. I'm not saying that, okay? We're saying that, and I said this yesterday, when you have volatility high and prices on many stocks or the index is down low, you can have year-like returns in just a period of days. Is that a guarantee? No. But the fluctuation, the range, which is down and up, can be massive. And boy, today, pretty good example of that, okay? Now, you can trade how you want. You can invest how you want. We're just kind of saying sometimes history, what we see in the history, can repeat itself. Each day, we don't know what's going to happen. We're just going to kind of look and see if that trend can rebounce back up a little bit. Now, VIX actually today better, okay? Whenever we actually look at the VIX, you want the price level of the VIX below the moving averages. If you're a bullish investor, and many investors are, okay, there's nothing wrong with that, you want the price down below the moving averages, okay? That's a start, okay? Now, when we actually go to this just real quick and we look at kind of statistical numbers here, you always like to kind of see the two areas, right? The VIX, let me just point to these. The VIX, you like to see that in really trend one, okay, below the moving averages. Let me have that load. We did also see, for example, so that's actually trend 5 right now. It's just saying it's in between the moving averages, below the 10, but not below the 30. So losing momentum on the VIX. If you're a bullish investor, that's what you want to see. You want to see that number drop down to a 3. No, you want to see it drop down to number 1, where the price would be below both moving averages. So that's a good start. And also when we actually take a look at this, we like to see the leadership come from the technology space, those growth areas, okay? Now, when you take a look at, let's say, the candles, and I want to pull up this just real quick, and Ben was teaching earlier today, and one of the things I kept looking at as he was discussing is if you're a Fibonacci person, okay? And if you look at this, one of the things I kind of kept thinking about is I'm looking at the cash index, okay, S&P 500. You could look at maybe a different product that looks at the overnight movement. But if we kind of said, look, this is where we topped out in the shorter term, and I'm going to even go down to some of you who like to use the wicks, okay, fine. I'm going to use that, okay? Now, the red lines, let me kind of guide your eyes here. The red lines right there, those are the Fibonacci numbers or percentages, okay? So today we actually got above the 23, and I included the wick, okay, included it. And you're going to see we got above the 23, we got above the 38, we got above the 50, okay? And then today, which I didn't think it could, but it did, it actually got above the 61. So this is kind of unbelievable that if this is where we topped out in the shorter term, we've already reclaimed over, 65% of that drop. So in almost one day, we pretty much reversed a major chunk of that. And so what can cause that to drop? It could be just sellers in general, and or it could be something news related, on many different fronts. And when it goes back up, it could be technically related / fundamentally related, but it could also be with that news related. Okay, so that it could cause, news could cause it to drop, news could cause it to go up. That is a part of it. Okay. Now, when you look at the NASDAQ, it's the same. So if you are a bearish investor and you're saying, look, I think it could go down, you have to be a little stunned. Okay, a little stunned that that move was that strong. Okay, and it reclaimed so many of those fib levels. Okay, Fibonacci is the word of the day. Okay, it makes me want to go eat Italian after this. Maybe I would. Now, if we pull up just real quick, if you said, show me the NASDAQ just real quick on this front, and I'm going to again draw from the fib, that it even got above the 61% level. Okay, so there's the 61%. Here's the NASDAQ. Now, if I took off Fibonacci, okay, so that's first off interesting. This wasn't like a small little upside move, close above the high of the low day, whatever. This was a pretty strong reversal here, and it went with authority. Now, the level that we were watching before I went on vacation is 19,268. Now, I'm not saying it's going to do this. Don't know. Live day by day, okay? If tomorrow we start getting above 19,268, those bearish investors who got into this decline, and it makes sense. People saw the price fall down below support. They start putting on some bearish positions, okay? Some more than others, maybe. And if all of a sudden we start to reclaim that, meaning the price starts getting above that moving, that horizontal line, those bearish investors might say, hey, look, maybe this trend that we thought was going to go down, it's not going down right now. Matter of fact, it's actually reversing. Now, we've talked about that before, is when you get investors to buy below support, okay, if they buy below support, that's one of the stronger indicators you can get, because why would you be buying below support if you did not think it could get above resistance? So all eyes are on 19,268 tomorrow. And if I went back just real quick on the SPX and said, hey, could we just take a look at where's that line before I left? Where's the level that we were looking at before? And Ben talked about this as well. It was 5,500. So if we can reclaim 5,500, that is substantial in terms of actually soaking up this bearish push down on prices that we've seen. So do not gloss over this. These are numbers you want to be watching, that traders and investors are going to be watching. And if all of a sudden we can reclaim those levels, you could start to do some damage control. Now, the comment I made yesterday was we had so much negative news, okay? And sometimes it's almost like pine trees that have been dried out so much that if anyone even drops a match at all, now, by the way, do not recommend fireworks or forest fires at all. No, okay, it's an analogy, okay? But when the market is burnt to a little crisp, okay, if you will, it doesn't take a whole lot for it to reverse because everyone was on one side, okay? And there's been a lot of discussion on that. And today you didn't see that it didn't take a whole lot for it to right back to the other side. So if you're a bullish investor, you kind of got a little bit better look here today. Want to watch those levels? We will continue to do so. Okay. Now, one thing I do want to point out is the sectors. Okay. Now, I'm not going to really speak to it in full, but I want to kind of see how accurate it's been so far. Okay. Drew this diagram. On the left-hand side, volatility. On the bottom-hand side, expected return. At the very top, we said technology, Y for discretionaries, E for materials, MAT for materials. So when we look at the sectors by a percentage change, we see transportation. Is that nope? Yeah, that's technology. Sorry, I look at two different sector lists. So first off, that's right there. Okay, where's discretionaries? Right there. That's a check right there too. If we also take a look at, let's say, the percentage, and by the way, let me it's going to make me redo that. That's okay. Now, if I take a look at this and I say, okay, pull this back, when we look on a percentage, you got technology and discretionaries. So check one, check two. S&P is the benchmark. There's industrials. That's in the middle we talked about yesterday. You got communications, which is like technology, and you got materials and energy. So if you looked at that and said, how accurate was that kind of diagram so far? The bounce, this growth area, we talked about growth tends to get pushed down on a percentage basis the most, tends to, not always. And when the VIX is high and starts to fall, these areas can start to rebound. So I'm going to say that tech and communications is going to be like an overlap to a degree, like Meta, Netflix, and so on, Amazon, among others. But if you take a look at the one that kind of was in there that was not in those four, it was industrials. And I'm going to put I right there. Now, if we said, look on the bottom, we said yesterday, U for utilities, R for staples, RE for real estate, and you also had V for healthcare. There it is, lined up on the bottom. I put gold there just because we said gold has been acting like a sector. But if we said take that out, real sectors, please, they were all lined up on the bottom. Someone saw the diagram, okay? All the lower beta, lower volatility areas, dividend paying typically areas, they went up, but they underperformed, okay? We're calling these more the income areas, okay? Dividend paying, they have a higher retention rate of their, well, they actually, I should say this, they have a higher payout ratio of their earnings. And when we take a look at these growth areas, they have a lower payout ratio, meaning they don't pay as much in dividend, okay? They're actually keeping a higher amount to try to grow their business, etc. And what you're now going to notice is those, as that VIX fell, okay, you just saw as that dropped, they went right back to the diagram. I'm showing you this to kind of show you the patterns that a lot of times you see. Now, all of a sudden, let's kind of say this. Let's say the VIX starts going up. What would we expect? Well, it's just the opposite. If this VIX starts going up, we're expecting these to get pushed down and these areas to maybe be a little favored, okay? So it's kind of like a teeter-totter. People run to the growth areas, okay, when the VIX is dropping. When all of a sudden the VIX starts to go up, all of a sudden the teeter-totter shifts the other way, okay? So they're trying to play those areas when there's like maybe a catalyst or some underpinnings, if you will, for those sectors to really work, okay? Now, are there any questions here before we look at our first example? Now, what I want to do is, and let me know if there's any question. I know I'm lagging, okay? And so I want to kind of see if there's any questions. So I'm going to come right back to it. But if I were to ask you a question, Uncle Pringle Pack, Speak Truth, Eric, if I were to say Dow stocks, were there any Dow stocks today that kind of stood out, okay? And when we say stood out, let's go to just real quick the Dow list for just a moment. We're going to go to public, and we're going to go right down to Dow Jones Industrial Average, okay? Now, if we look at the Dow Jones Industrial Average, if we want to kind of get a sentiment in terms of what do we see in terms of trend in general, well, we're looking at that trend column, and first off, when we look at, let's say, trend twos, that's a whole bunch of stocks that are trying to or could be doing diagonal breakouts. Now, that's the first sign of actually diagonal breakouts. You get some trends twos. The second sign that would actually be showing us that it's actually becoming a little bit more interesting is, or could be, the 10HC, which is the 10-hole counter, where those moving averages, they stop from being red and they start shifting green. Watch that tomorrow. The one that's kind of standing out the most is Amazon, okay? Notice that turn green, meaning the moving average is green, and the one number is saying the moving average went green today. Remember, scripts are not guaranteed for accuracy or timing. You want to have an understanding what that script is trying to show, and your eyes can verify it, okay? Now, if we take a look at that, I want to also pull that up for just a moment, okay? So that's one that stood out. If we kind of said, are there any stocks that have kind of not just broken diagonal, or diagonal, as Ben tried to say today? By the way, Ben is learning, okay? Ben is really learning quite well, okay? Diagonal, okay? Wisconsin, Milwaukee. Now, one of the stocks that's actually done quite strong in trend 3 is really going to be UNH. That UNH, we actually have a hold there, okay? And we also see that the moving averages have been green. So that's one that's kind of definitely been a standout here, okay? Now, we got to ask ourselves the question, is it just UNH or are there other stocks in that space? Now, that's a question for you. Are there stocks in the healthcare area that maybe we might pay attention to? Okay? Now, if speaking of that red shirt again, now we know that, let's say in the world, if you were over in Europe and you're watching maybe a little bullfight, that little guy, who's the guy that stands out in the middle and yells, "Atara, Atara, Atara," right? Who is that guy? The Matador, is that his name? Okay, now, if you take a look at this, they kind of wave that red shirt, right? And they're trying to get that bull to charge. Now, what's my point with that? Atara, Atara, Atara. Well, the whole point of that is what would cause the bullish investors to charge? What would the bullish investors want to see to say, hey, look, I'm going to get in? That's a question for you. What would they want to see? Well, number one is we kind of said the trend column. I mean, that's a start. I think this one, right, that 10HC, having that turn like Amazon did here today, if we're talking about getting that bull to charge, those bullish investors would probably want to see that moving average turn green. Second would actually be the 20-period moving average turn green. That might cause more bulls to charge and those bears or the bears to maybe flee and exit as those bears get pepper sprayed by the bulls. Okay, not a recommendation. Now, so keep an eye on those technical things. Okay, now we're going to kind of talk about some fundamental headwinds here for some of these bullish examples. But if we take a look at this, is the last thing I would kind of say with this is, do we also start to get the, so I'm going to label this as number one, okay? That's the column we're going to be watching. Number two column, yes. Number three column. If we get more and more of those things to shift green, it's actually just seeing more and more bullish indications of short-term trend change. And obviously, if we start getting into hold, we'll label that as number four, okay? 4, 5. That would just be the breakouts, okay? So I'm looking at those columns to really kind of see if we're starting to get more material bounces. Let's go to just real quick to the Amazon chart for just a sec, but I do want to take a quick peek on the healthcare space. Why is it going up like it is? Now, about 2 weeks ago or so, we talked about diagonal resistance, right? Now, we've kind of had a fall down from there, but it doesn't necessarily mean it can't replay itself out again. Now, if we took back some of that news that came out, maybe could have that rally that we actually had about right there, could that have played out if that maybe big news did not occur? Speculation, we don't know. Maybe if we didn't get that, maybe that reversal would have happened, okay? Who knows? But it's a question. Now, if we go back to this chart, what you're now going to notice is we're kind of looking for that shorter-term moving average. When we actually saw, for example, that green background with the number one, that's what it's pointing out, okay? Now, what you're now going to notice is a better sign that we actually get above also the 20-period moving average. Now, we're coming into the period of earnings, and this is very important that we understand this, okay? These companies, Amazon, among others, Delta, UAL, and many others, we'll talk about these as we're shifting now to trading, okay? A lot of these companies, number one is we want to see, did they hit the revenue and earnings per share? Fine. But it's not necessarily like what they did. It's really what they think they could be doing. Now, given the environment, the backdrop that we've been actually kind of in the last week or 10 days or so, you got to imagine that many of these companies, when they come into earnings, these companies might A, lower their guidance on earnings. 2, they might actually, let's say, just completely withdraw their guidance as far as earnings in general, just because they don't know what those earnings could be or any potential policies, okay, that could affect their business. I think of the market a lot. I think when we think about investors, have investors factored probably a bunch of that in? I think if we're talking about experienced investors, a lot of them have probably already factored that in, knowing that companies like Delta and UAL, et cetera, they already know that, okay? They know, just like Delta today withdrew their guidance. So if you're a fundamentalist, we're kind of seeing a period of slowing growth, which hurts intrinsic value, okay? Second, we're also seeing something where it's harder to kind of forecast potentially. By the way, if you're an investor, you are kind of forecasting what the market could do. That's kind of what you're doing. And the biggest actually thing is we kind of need some time to go by to see if some of these companies, what they're going to do with their earnings, what they're going to do with their dividends, and do they actually restate kind of their guidance going forward. Now, that's a mist of darkness right there. That's a cloud, right? You can't see through it. And that's why a lot of times when investors they're not really sure what those earnings are going to be, they tend to sell. Now, I just said a lot of bad things, but I think that's the backdrop we're still in, is we need to hear from some of these companies and saying, how sure are you that you can actually hit your numbers? Okay? So it's going to be very important that you listen and read what they're actually saying and seeing which companies stick to their guidance. Okay? Now, I want to go back to Amazon for just a moment. When we take a look at this, you're going to see that we have this this old support level was in 191. Now, this looks very much like, okay, the S&P, the NASDAQ. Now, we talked about doing dollar cost averaging. We talked about using buy stops and buy stop limits. Trade number one that we're going to do in this case is, okay, now I'm going to show you this one first that I think investors need to kind of understand. Now, by the way, if we go to the analyze real quick and we go back to, let's say, fundamentals, here's the deal. We're not saying that the fundamentals don't matter historically, but as you can imagine, investors really want to know going forward, what do you think you can do? I mean, this is going to be critical. We're probably going to be very short-sighted as far as what we're looking at data-wise, because what happened in the past could change. Make sense? So that's why earnings is going to be really big here. And by the way, it's a good learning lesson for you to listen to those conference calls and kind of see what's being asked and how is the company answering those questions. Now, by the way, that does not mean you're an analyst. That just means you're actually using your ears and listening. Okay, doesn't mean you're an analyst. Now, what I'm going to do is option number one is some investors might say, James, I'm going to put my a buy limit order right in the middle of the candle. We call that S1. Okay. Second option is we're going to set a buy stop or a conditional order if we get above today's high. Do you know how to do that? Now, a lot of times when you get these green candles like this, a lot of people say, I'm going to wait for it to pull back. Okay, great. So what does that look like? Or they might say, well, or I'll wait for it to get above today's high. How do you put that trade on? Well, let me pull up the paid money account, and I'm going to pull up Amazon for just a moment. We're going to go to just real quick this, and what I'm going to do is I'm going to right click maybe. Now, some people would take it like perfectly halfway, okay? If you're more bullish, it might not come down to the middle of the green candle. It might only come down to, let's say, this low point, maybe like a third of the way down. So what I'm going to do is I'm going to say, look, maybe it doesn't come down to the middle of that candle there. Maybe the investor says, look, I'm going to try to buy on any dip. I'm going to right click on the chart and go right down to where it says buy custom, and we're going to say with OCO brackets. So that's not that bad. Just right click on the chart. Okay, now where this kind of gets a little interesting is we see the green row here. Okay, there it is. And on this green row right here, we're going to change this limit order to a market order. Now, before I go there, I want to take a look at what today's high is. Okay, and by the way, I'm going to write this on the chart so you can follow along. Now, where is this line? That is at 185.78. So it's like saying, look, get in if we get to that price or less. Number two, we're saying, well, wonder if it takes out today's high. What is today's high? Or approximately 192.84. Now, why am I writing these down? So you could follow along. And also, when we go down to where it says limit order right there, I'm going to go limit market day to GTC. Now, some of you are thinking about, James, I thought I'll do it again. Well, look. Okay, come back from El Toro. I know you're thinking about that. Now, if we go to market, change it to market, GTC, click on the gear. Okay, that gear will show when you put your cursor right there. Now, when I click on that, we wanted to use this conditional order. Now, the numbers now are helpful. So we're going to say in one of, it's not going to buy at both, okay? It's going to be at one or the other. Let's use the top side first. So I'm going to go down right below Amazon, right below symbol, and if I click in the box, it just automatically pulls up Amazon. Method, mark, okay, in between the bid and ask. And what I'm going to do is going to change that greater or equal to. Now, Ben is the master of this, okay? Greater or equal to. Now, don't worry if you're not good at these. You can read it as well to confirm that you really do know what it's showing, okay? For you that are not mathematicians. Now, if I type this in Amazon, mark, so notice that that little sideways V is pointing towards Amazon. So think of that sideways V as saying Amazon, the stock price, is higher than or equal to 192.84. Now, this might blow some people's minds, and they might be saying, why are you trying to buy it if it's going higher, if it's getting above that price? Well, if it gets above that price, that might be a potential bullish sign that it might go higher. It doesn't guarantee it, but the investor is trying to catch the momentum. Now, right below that, Amazon, mark, less or equal to. Okay, going this way. And this is now saying if the price is less or equal to 85.78. You want to make sure that these numbers are down here. They are, okay? Now, in this case, what you're now going to notice is it's not going to buy at both. If we go up tomorrow, if we open up higher than 192.84, it's a market order to buy at that price or higher. Second, if it doesn't go to that price, but then drops down to this price or lower, it's going to try to fill, okay? Now, I'm going to tell you right now, you need to practice 3 of these. So many times as investors, we kind of have retailitis, consumeritis. We're always trying to buy stuff cheap, okay? We're not trying to buy cheap. We're trying to buy things that have value. We're talking about investing here. This is, you know, it's not just all about the price. It's what's behind that price and what's underpinning it, okay? Now, if I take a look at this, we're going to go save. We're going to also put a target. Now, if we were to just say, look, James, and I'm going to kind of play this, okay? Let's say you were a person that says, James, I think the market's going to go down. I don't think this up move is going to last, blah, blah, whatever. And that investor says, look, I'm going to try to play this move, maybe back up to about the 206 level, okay? And that's it. And that's where I think this kind of stalls out, doesn't go up any higher, and the sellers come back in and push it down. Noted. I'm going to put that right at 206. Now, when we talk about the stop underneath, I'm going to put the stop right underneath today's open price, okay? Try to give it some room here. In more volatile markets, I know some people say I'm going to set tight stops. What you probably just find out is you get stopped out a lot, okay? So the thing is here, 168.58. The investor might come to the realization that they might set looser stops and have less shares so that way they don't lock in the losses, okay? If you set tight stops, you're going to buy a higher number of shares. In more volatile periods in the market, then you get stomped out of many of the positions and you realize those losses. Here, if we actually said, hey, we're going to take a capital size, example given, 6,000, okay? And I came back in and said, how many shares would it be? 32. Now, we could position size another way. For time's sake, we'll just do 32 shares of stock. We'll come back in and go 32, okay? Or 31. Now what you're going to see is we've got what does this look like? You got, in order to get in, so many investors might say, James, I want the price to dip. That's fine, but wonder if it doesn't dip. That's what that price is for. It's not going to buy it both. It's one or the other. Now, as a homework assignment, you got to practice 3 of these, okay? I think a lot of times we're always looking for that pullback that doesn't sometimes come as much as you want. And that's why understanding kind of putting a higher price there as well is important. Got a target price and the stop underneath. Now remember, I put a stop kind of being Mr. Bear here and kind of saying, what if I only think it's going to go up to 206? So I did that. You might not share that hypothetical viewpoint, but that's why I did that. Send that order. Okay. Now if we take a look at this, okay. Now the one comment came in from Kenneth is China seems to like the news. Well, you got to remember our stock markets are linked to the Asian markets to a degree. It's linked to the Australian markets. Then when Europe wakes up, it's linked to the German markets, the French markets, the British markets, right? They all trade typically based on confidence or happiness or green or red candles or fear or confidence, okay? So, yeah, they're linked. When they see our markets go up X percent, even if it's not the exact percent, a lot of times they trade on that, okay? Or they trade down on that. Sure, okay? All right, now I want to go back to just real quick one of the stocks we pulled up yesterday. Now, this class is not about volatility, but the reason why we did Palantir yesterday was we said, hey, let's kind of pick something that has some volatility. Now, as a stock investor, you look at what's called beta. And beta could actually be seen in two different forms, right? One form, so if I go to the trade tab right there, and I have Palantir, PLTR, going to kind of open this up a little bit. When we get right below where it says underlying, we see the little sideways caret. I'm going to click on that, and it's going to expand that section of stock information, such as yield and so on. Now, over here to the right, what you're now going to notice is beta, 0.7167. Now, this beta, if you look at this, there could be two different calculations. Is the beta a 5-year beta, or is it really if I go to calculations, what is the standard beta? Well, that standard beta is really looking at a 5 years of pricing data, okay? And it's really looking at the correlation of the return of the stock compared to the S&P. So if we're getting a number there, less than 1, it typically hasn't moved right in line with the S&P. Or how does it correlate to the S&P? And if that number was actually greater than 1, percentage-wise, it's been more volatile than the S&P 500. So that's like a stock volatility metric. It's historical, okay? Now, many investors don't like standard 5 years. They like the fast. And if you look at the fast, now we're looking at the last 1 year. Now, 1 year could seem like a long time ago, okay? Now, what I'm going to do to this is I'm going to go apply, and this is now giving us a more sense of anything that has a beta probably greater than 1.5, there's your volatile stock, okay? If we just looked at the betas and said, let's kind of compare this, Coca-Cola, what's the fast beta on this? You can look at these betas and probably get an idea of are these probably more income stocks, value stocks, or growth stocks. Coca-Cola is at 0.12. What's Walmart? NAN, or 0.78. So a little bit more volatile. We actually take a look at something like Netflix, okay? You pull 1.3, a little bit more volatile. And if I pulled up something like Meta, okay, 1.51. So if you said, I don't know anything about derivatives, not a stinking thing, you can actually look at that and realize that the stock volatility metric can link to the derivative metric, okay? That's all I'm going to say about that. But there is a correlation, okay? Now, what I'm going to do is I'm going to pull up just real quick. One of the stocks that I wanted to pull up for just a sec is, let's pull up, if we can, let's go to just real quick, Meta. Now, Meta, what you're going to notice is the support level it had was kind of right there, okay? Now, above that level that I just drew, the 582, we kind of really have this double top area, okay? Right there. Now, you guys know that in our classes, we kind of like to talk about channels, okay? Now, today, at the close, we put our nose right above the 582 threshold. Now, if we can get above the 582 and start to close inside there, the path of least resistance could be that we try to come up to the top of it. Now, Option number one, I'm going to go ahead and actually do this just real quick. Let's do it a little faster now. I'm going to right click on this, maybe about like a third, give it about a quarter down from today's price action. Buy custom with OCO bracket. Now let's do it faster now, okay? Now I'm going to go limit order. Now, what's today's high? 5. By the way, you don't have to type it on the screen, okay? But what I'm going to do is I'm going to kind of write my numbers just on a sheet of paper. So today's high was 587.89. That was the high. And if I said, well, hey, if we give back maybe like a quarter of today's candle, that's 567.18, okay? Now, so here we go. Let's do it a little faster. This is part of your homework. We're going to go to market, dated GTC. When I do that, I go over here to the gear right there. Same thing we did before, practicing again. We click on that, slide it over, and now what I'm going to do is I'm going to put the higher price first, okay? Now notice that sideways V is pointed towards the ticker symbol for the stock, saying the stock price is greater or equal to, I'm just even going to put today's high, 587.89. Now that blows some people's minds. Why would I pay something higher? Because you think it's going higher, okay? Now you got to ask yourself that question. I mean, why did your spouse marry you? Well, they married you because you were at a high when they married you. Don't tell me you weren't at a high. I mean, what are you saying? They married you at a high thinking that you were going to go higher, right? Okay, so don't tell me this is unusual. Okay, you've already done this in your life. Now, if we take a look at this, 567.18. Now, what you're now going to notice is this is saying if we get to that price or less, enter. This price or higher, enter. It's not both. It's one or the other. You want to make sure that these numbers match those numbers. Yes. Now, if we take a look at this, we go back and say save. I'm going to go back to the capital size that we've been talking about. Okay. And you're going to see that it's really, let's kind of put that in right there. It's about 10 shares. So I'm just going to take this off, just kind of take off a 0, got 10 shares. Now, why is it only 10 shares? That's a bigger dollar stock. Now, price target wise, 633.51. Now, I'm trying to imagine where might Bill try to get out. Bill who? Well, there's lots of Bills, okay? But let's say there was a guy named Bill. And you might say, I'm expecting Bill or these other people to sell at 633.51. You might say, James, I'm going to try to sell a little bit earlier than Bill or these other investors. So that's what some investors like to do is undercut where they think, meaning sell a little bit lower than where they are forecasting that other investors might try to sell. Second, we actually come down to the stop. Today's low point is really 510. Now you might say, James, there's no way I'm taking that drop. I'm going to kind of put this stop right below the moving average. Okay, the moving average being 532.44 less 2%, and I got 521.79. Now, when we talked about 2-3 weeks ago on dollar cost averaging, there's nothing wrong with practicing dollar cost averaging. Nobody says that you had to buy a full position. Nobody says that. Go back to what we talked about 2-3 weeks ago. Meta is, if we kind of said, is Meta more of a growth name, value name, or more probably income? Well, if we took a look at beta, it would probably make us speculate that's a little bit more of a growth name. You could also go look and see, does it pay the dividend? It only pays a yield of 36 basis points, or how do you say that? It's not even a percent, okay? 0.3% or 36 basis points. So that's not a growth, that's not an income play, okay? Now, if we take a look at this, we're kind of thinking of if this momentum can continue to push, it might try to go to this next area. Now, your homework that we did 2 practices on, I want you to go out and look for some stocks, and I know there's a lot of them because we saw them. I want you to go look for some stocks that are pressing up against horizontal resistance. And I want you to practice doing these orders of if it goes at or below or at or above, and I want you to target the prior horizontal high. This class is on trading growth and value. Okay, today we did more growth. Why did you do growth? Well, you do more growth or try to focus on growth when you think the volatility could fall. Okay, so that's why we're focusing on the growth names. So that's the homework I want you to do. I also want you to be watching kind of and listen to the financial earnings that are coming out on Friday. Do they give guidance? Do they cut the guidance? What do they say on the guidance going forward? That's going to be critical from a fundamental perspective. Now, I'm out of my time here today, but remember with what we discussed here today was done for example and illustrative purposes only. Remember, coming up, we're going to be in Detroit, Denver, and Anaheim. We would love to see you there. Go to schwab.com/events to get more information on that. Those are free events to attend. And also remember, you can also follow us on YouTube. Just go to Schwab Trading, and you could actually find us there. Let me actually just real quickly, if you go to that, there you go, okay? You go to Trader Talks, Schwab Coaching Webcast. There's the link to get to that page. If you have not subscribed yet, do so. Now, also remember that we'll come back in the morning right at 9:30 a.m. Eastern. But I want to say thanks to you and thanks to Ben as well. And thanks for having a little fun here today with the green and red shirt. With that said, have a great day. Take care. Bye-bye.